All right, we are live. Good morning, everyone. It's 10:30 in the morning. It is Wednesday, October 23rd. Market's been open for about an hour. Cool, guys. Well, look, for those that are new here, I basically do 30-minute portfolio reviews, just go through all my trades, full transparency. What you see is what I trade. At the end, I'll do a Q&A and kind of just go through things that we want to discuss or any questions anyone may have if you want to go through any trades you're thinking of doing. But pretty much it's just to kind of make this a journey where we all grow this account together and get it to 250 kind of has been the goal. From there, double that to 500. But first, the goal is to 250. Started this account with about 150. So we're on our way. We're almost there. That's pretty much it. I just came back from San Diego, California, where I actually met up with Christian and TJ the Wheel Deal, two very important people here on the community. I'll make a post about it after so you guys can follow them. I'm sure you've already followed them. But it was awesome. It's great to meet people from Twitter in real life and talk to them and learn from them. And everybody has their own journey as to how they got here. So it's been very, very interesting. All right, guys. So pretty much, we're kind of in the beginning of quarter four. We have a lot of earnings coming up this week for the Mag 7. I think the first one to have reported on the tech side was Netflix, which did very well. I believe we have Tesla coming up this afternoon. There's obviously a lot of speculation around Tesla's earnings. It's a very volatile stock. So, we'll see how that transitions. But that's pretty much the gist of it. Let's go ahead and kind of dive in and go through the different trades. So right now we're down about close to 1% on the day. If you look at the year to date, we're up about 48%, 49%, 72,000. Let's just kind of go through each individual trade, and I'll kind of tell you guys where my head's at. What you're going to notice is that my portfolio is pretty, you can, when I say lean back, it's got its feet grounded in the present, but it's really leaning back in a bearish sense of the word. Leaning back in it's being very protective, if you will. I do think that, with the Mag 7s reporting, I think if one of them under reports or one of them doesn't live up to whatever Wall Street expectations are, I think we're going to see the QQQ and a lot of them kind of react to that. Right now, I think the general environment is keep the party going, keep the music going. So if there's any pause in the music, I think it's not going to be good. I've been trying to build a cash position to kind of take care of some of those and buy some of those dips. I'm looking specifically at Amazon. I want to start a position at Amazon. Let's see where Amazon's at. The question you need to ask yourself is which company is going to be able to really utilize AI and utilize robotics in the next 5 to 10 years to drastically bring down their operational costs. And I think Amazon is one that is primed to do that. I mean, look, it's down 1% after hours. 187 is not a bad entry point. I think we had all-time highs in the 200s, and it went down all the way to the 160s. So, look, I think with earnings, it's 100% buy. Available October 31st, so it's going to be next week. What I may do is I'll pretty much probably do what I always do when it comes to opening up positions, which is I'll either sell a put on it at a price that I'm comfortable with, but that requires me to have all that money now, right? So if I sell the put, that requires me to have the $19,000 available pretty much right now to buy them. Right, because that's the point. I'm not using margin to buy them. So the point is you need to have the money. And, truthfully, right now I don't have the money. So the reality is if I want to mark this entry point, I'm going to do what I did with Celsius, for example. And what you do is you basically you buy a long dated call, right? So that way you're controlling those shares. So I'll do something like January 2025. And the reason why, and obviously because of earnings, the IV, the implied volatility is going to be high. So they are going to be a little bit more expensive, right? But that's why you then sell a short dated call, because that call is also taking into account the high IV, and therefore you bring in premium that'll hopefully reduce your cost on the long call. So if it's at 187, you always want to go a bit in the money. So I'll probably do, 185 here, right? So I would do something like this, and then I would go in here and I would sell a call, probably do it 9 days out to make it worthwhile. But look, at the end of the day, you're doing 185 and you're spending 14. So your break even is somewhere in the 185, 195. It's somewhere in the 200s, right? $200 is probably your break even. 199.15. So, you want to sell something where you're kind of close to your break even, but you can afford to be a little bit below it, because since you have the time on the long call, it would be a good problem to have if you have to roll out this call, right? So I would probably do something like 195, right? And so it brings down the cost of of owning these shares to basically $1,000. So it brings my break even from 200 to pretty much 195. And then what I will do is, shortly after this one expires or I roll it, I will just continue to sell calls on it until I exercise it in 2025. And then look, my cash outlay is $1,000 as opposed to $20,000, right? So it's literally 1/20th the cost. All right, well, we're 7 minutes in, so let's go ahead and start with the positions. So I did a bit of a summary. It's pinned on my Twitter on what I want to do with each of my positions. CleanSpark is one of those positions that I really just want to get rid of. CleanSpark's a great mining company, but the reality is, if you're bullish on Bitcoin, you might as well just buy Bitcoin or Coinbase, because the issue with these miners is that there's a lot of things that go on behind the scenes, things that are not completely entirely related to Bitcoin, dilution, energy costs. I mean, there's a lot of things. And if you want exposure to Bitcoin, you might as well just buy a Bitcoin ETF, a leveraged ETF, or Coinbase in one of the exchanges, right? But miners, you really have to be tuned in and follow their day to day to really be okay with the risk. Now, having said that, the premiums on them are really good because of volatility. My story with CleanSpark is, I actually my cost base is somewhere in the $17. By selling options, I've been able to get my cost basis down to, I think it's like 12. This isn't correct here. I think it's like 1250, 1260. And I'm very close. I have pretty much 500 shares, and I've sold 3 calls on them. I have 5 calls on them. So all my shares are accounted for. And really, this has just been from rolling. A lot of them have been caught underwater. It seems to me that all these 3 are going to be doing okay. The one that expires the soonest is this one right here, the 1025. It's at 1181. It did spike up, I think, to 13. So I'm not too concerned. I can always just keep rolling these. But the idea is that once I have these free and clear, I'd like to let them go. They're going to be for sale at 13 plus. So anything above 13, whatever it's at that point, I'm going to let them go. But I really don't have to worry about this position until really I roll 1 position here, and then November 1st for 3 positions, and then November 8th for this other position here. So, I'm not concerned. These are all doing good. I'm up 16% on this one. Yeah, just keep monitoring CleanSpark. Intuit is so the story with Intuit, I keep posting updates on my Twitter. If you want to find them in there, just search by Intuit. Pretty much, we had 10 calls. 4 of those expired on the 18th. They expired worthless. And also on the 18th, we reached a milestone where we reached break even. So what that means is that all the premium we've bought in covered for the 4 that expired and the 6 that we bought that expired in December are all accounted for. So that means that right now I'm like at a 0 basis. So everything that I bring in by selling calls is pure profit, right? So that's pretty much what I'm doing. I'm waiting for it to turn green so I can sell a little bit more calls, but I did sell some calls this morning. So I have a 635 call that's expiring on the 1025. This one I had sold last week, actually. This was a bi-weekly one. You can see I collected $250 in premium, and it already has, so I'll probably close this. If the price is $20, I'll probably just redeploy it at a 620 and bring in 150, closer to that amount. But for $25, I don't think it's worth holding for the next 2 days. I'd rather just find a good opportunity for it, right when it turns green. I'll either sell another 2 weekly or 1 week. So I have about 6 long calls on it. So that means I can sell 6 calls on it. And because I'm below the strike of the long calls, you have to be very careful when you're selling them, right? Because it is going to require collateral for that difference. And you don't want to be caught underwater. The reason why I'm so aggressive with these is because I have enough time where I would feel comfortable rolling these out to the 690 eventually. 620 is close, but we have 2 days left. I feel comfortable with this risk. This 510 put that I bought is really just to basically a placeholder for all the collateral that would have been required of this 620 put. So $62,000 would have been required. But because I bought this 510 put, basically 51,000 of that collateral is accounted for with this put. So it really only requires 510, 610, basically 11,000, if my math is right, $11,000 of collateral as opposed to 60. So that's really what I did here. It's really a wash. The idea is really for this put to be the one that prints. I rolled that out from a 630, so now I'm at a 620. I'm pretty much going to hold this till expiration. I do think Intuit is a bit compressed right now. These are the 690 calls. They're worth about 575. Those are pretty much what we're selling calls on. So I have 3 calls out. So I have 3 more to sell. And hopefully if this turns green, I'll go ahead and sell those calls. But right now, Intuit is kind of doing its own thing. So that's the position on Intuit. Riot is one of those positions that I actually haven't owned. And I really like, so I had when we met up with TJ, the Wheel Deal, and Christian, he was actually in San Diego also for a roundtable with the Riot CEO. And I think he's going to be putting out a video today or tomorrow kind of detailing all the behind the scenes that Riot kind of has going on. And I think as far as his pedigree, I think Riot is one of the best miners, transparent, strong leadership. But, I haven't owned it. I've just been selling a lot of puts on it. I think I've generated close to $3,000 to $5,000 on just selling puts on it. And honestly, I'll continue to do it until I either get assigned or it comes back down to prices that, are very attainable or very worthwhile. Like it was trading in the 6s and 7s just a month and a half ago. So this is one of those strategies where I have 10 $7 puts expiring, $7 puts expiring this week. Collected about $440. I have this 950 put expiring also this week, about 50% already attained. And then I have $8.50 puts that are going to be for November 1st. And these are already also at 50%. So you can see that, with Riot, we're already close to a 700% return. I think we'll get it to $1,000 by the end of the month. And then we'll see where it's at and see what we do, But right now, that's I kind of wanted to stay clear of anything going through the elections, or I'm going to be very, very cautious if I do sell through the elections, because you don't know how the markets are going to react. There's going to be a lot of whales moving around, and you just never know. So we have Riot, Tesla. So Tesla, this is my Tesla position right now is I pretty much don't have to worry about it till December. That's when a lot of my calls expire. So I have 8 205s expiring December 20th. These are just basically, honestly, these are sort of like a hedge to me. Sure, I don't really participate on the upside, but on the downside, I'm pretty protected. And then once we reach November or December 20th, I'm going to roll these out till 6 months, and it will probably be above water. So right now we've collected about $28,000 in premium. Doing pretty good with these. I'm not concerned about them. Just letting these ride. The only one that I really have flexibility on is this 210 that's expiring this week. And because of earnings, I haven't really done anything with it. We have 210 and it's at Tesla's trading at 216.60. So it's got about a $660 intrinsic value, right? And it's worth $11.45. So it still has about $500 worth of premium in it. So that's why I haven't really closed it out yet. I'm gonna probably wait till the earnings today. I think this will be worthwhile. Now, the reason why I'm not going to close it out now, even though I can for $1,000, just close it out and wait, is because I'm really trying to protect my downside with Tesla. Tesla's volatile, and if it goes lower than, 210, 205, who knows where the next support will be. So this is really downside protection. My upside is really in my TSLL shares. So I have about 1,000 TSLL shares that I've only sold maybe like 3 calls on it. So the majority of those shares are unencumbered, just waiting for it to go up. So that's really my downside. My TSLL is my upside. Personally, I do think Tesla is gonna correct after earnings, and I'll tell you why. Because with earnings, obviously the macro environment with the U.S. economy is not in the best shape. Tesla's managed to pull out a win out of the hat last quarter, mainly due to rebates, but you saw it when you compare results to other EV companies and other car companies, that it's not a pretty scene out there. And so because of that, I don't think they're going to be doing, it's going to be an impressive sales figure when it comes to cars sold, but I don't think that's going to be enough to justify the PE that Tesla has and that Wall Street is expecting. They're expecting revenue from self-driving. Now, if Tesla is able to show their FSD income grow substantially, I think that may be enough to trigger it on the upside. But I don't think Tesla is going to share it because I don't think it's substantial yet. But who knows? Worst case scenario, I roll this out. Best case scenario, I make an extra $1,000 in premium by the end of the week. So it's I'm not concerned. Clean Spark, we covered. Riot, we covered. SoFi, I pretty much tapped myself out on SoFi, which is fine. And this is why I keep saying that my portfolio leans back a bit, because I'd rather my growth come from time and rolling than actual share fluctuation, if that makes sense. So what I mean by that is I'd rather roll into the price. I'd rather it get away from me slightly and I roll into it, let time decay and share appreciation account for my account growth, rather than it just be pure speculation, right? So I'm putting myself in a position where I win either way. I've got $8.50 calls expiring November 1st. So I'm going to easily just roll these out. I've got $8 puts on November 15th. So those are pretty much just leaving those alone. I've got 6 $10 puts. Speculatively, it's speculative, but it's not that bad. $10. We're going to have to wait and see. I may close this up before the election, but right now I'm just collecting premium, $150 worth of premium, just letting time eat that away. This is a backstop trade, if you will. It was, but now it's obviously not anymore. I've got $8 calls for January 2025, $7 calls for January 2025. So look, honestly, with my Tesla positions, with my SoFi positions, I may be able to just roll for the year if I really wanted to and still bank a 20-30% return and it hedge to the downside. So that's kind of the position I'd rather be in, especially now when the market's a bit frothy. Just kind of leaning back a bit, not being so aggressive with calls and so on. I do have a $10 call that I believe this share is attached to. So that's pretty much it, guys. I do have to go, so I am going to cut it short. But any questions or anything you guys may have, let me know in the comments, and I will address it in the next stream. Thank you guys for checking in. Appreciate you following. Please follow me on YouTube. Click follow on X. I post my trades on there. Until next time, guys. I'll probably try to do one on Friday. Take care.